Hi, this is Alan Mandel, HTDT Gold 75 Wall Street, with our report for October 17th, Thursday, 2013. Well, three things are compounding the move up in gold today. 3%, 3.3% at the high. Number one, China lowered the credit rating of the U.S. They have given U.S. Treasuries a haircut during the debate about raising the debt ceiling. They're only allowing 90% collateral for U.S. Treasuries that are used to collateralize margin debt and futures contracts and certain other financial instruments. Also the dollar is down 1% today because the interest rates, the tapering probably won't happen until January now at the earliest. And that's because Janet Yellen is coming to the Fed, and also because the debt relief deal that the Democrats and Republicans came to agree on is just kicking the can down the road a little bit, and they're going to face the same type of debate on what to cut and what not to cut, whether to raise the debt ceiling or not, a couple of months down the road. Now, Janet Yellen coming into the Fed, this is going to change the focus of the market. The market was a single focus market on raising the debt ceiling over the last few weeks, and now more, shall we say, normal views, normal perspectives are going to come back. What's influencing the market is the continued easing that will be taking place in the market. That will be lowering the dollar and could continue to spur a rise in equities prices. But the equity market is kind of getting hammered in another way. Even as prices go up, the dollar goes down, so there's less purchasing power for the dollars that are invested in the stock market. Stock market goes up, dollar goes down, it's a wash. Also, we have to be mindful of China's lowering of the credit rating of the United States. This is very significant. China takes their policies very seriously. They have $1.7 trillion of U.S. short-term T-bills and $1.3 trillion in bonds. Short-term T-bills have been going up during the budget crisis, which has been giving China a loss on their capital. So they're going to be watching this very closely. As for gold, the situation, as I've been saying all along, is very positive. Gold is benefiting from the lower dollar, the insecurity that the United States is showing over its debt and continued deficit problems, and the Fed. The Fed is going to continue pouring money into the economy, buying mortgage-backed securities of questionable quality, treasury bonds which are being depreciated because the dollar's falling. So there's a lot of concern that a black swan event or something that's not apparent right now is going to surface also. It could come from Iran. Egypt is in turmoil once again. It could come from North Korea. It could come from Asia. We don't know. But what we do know is that things are not looking stable anymore for the United States because the two sides cannot come together on a budget deal and they just kick things down the road. So I would hold tight, buy gold on weakness, and be happy that you have it in your portfolio if it's already there. Thank you. This is Alan Mandel, HTDT Gold in New York.